Welcome to the Professionally Evil Perspective. I'm Nathan Swaney.
I'm Kevin Johnson.
How you doing, Kevin?
I don't know, man. What is this? Season 3, episode 5?
Season 3. That's what we're going with the completely made up season numbers.
Yeah. No, they're not made up. Like we talked about earlier, we should be proud of the fact that we have as many seasons as Ted Lasso.
There you go.
And if you're not watching Ted Lasso, watch Ted Lasso. Apple TV is not a sponsor. And
I actually have not seen it yet. I'm going to have to find it and check it out.
Man, it's awesome. I don't even know how to explain it. Like, let's be very clear. If you were to say, "Hey, Kevin, here's a TV show about soccer," I'd be like, "Yeah, okay." This is definitely not the type of show I'm looking for.
Right.
And I have almost peed myself on every episode except for one. There was one episode in season 2 that I just don't know what the heck happened in that episode.
So I was thinking about like downloading it to my phone and watching it on a plane, but peeing yourself on a plane is not the best place. Like, I don't know if I want to take that shot.
I don't know, man. I think if you're gonna pee yourself, a plane's the best place to do it because you've only got a limited time you're sitting in it. Whereas if you pee yourself in your like living room,
yeah,
you have to fix that.
I'm flying to Thailand. It's like a 24-hour flight. So
oh, okay. Yeah, you're right. Pee in your living room. Okay, I said almost. I have never peed myself because of Ted Lasso.
That's good.
I will not say I've never peed myself. I have absolutely. I was a kid at one point.
Oh man.
We won't talk about that middle school bus ride. Oh.
This thing's going downhill.
Oh, downhill. Kind of like.
We should be a bank.
Oh my gosh, we should be a bank. This is the perfect time to be a bank. Yes. Yet another podcast discussing Silicon Valley Bank. So Nathan and I were talking about like what do we want to talk about? You know, we come up with the topics. His mom didn't send in any recommendations this week. And we thought that a good topic would be the Silicon Valley National Bank, Silicon Valley Bank, SVB, the bank run, the failure of the bank. Now, I want to be very clear. I don't think either Nathan or I are experts at finances. I mean, I've been to a Dollar General. Okay, I've shopped at Dollar General many times. I know what it is to eat government cheese, whatever you want to call it, right? But I actually think I've been reading a lot about the SVB Bank branch. I've been reading a lot about finances in general. And as we'll talk about, Secure Ideas went through something with their bank, our bank, recently. Matter of fact, the week before SVB failed, that brought a lot of the risk thought into mind, right? Like that, I think is the topic. So for the people who don't know, the 3 people living under a rock, Silicon Valley Bank, and I'm going to paraphrase some of this. I'm going to do it from memory. It's a bank that had like what was $209 billion in assets.
A lot. Yeah.
I don't know why that number has stuck in my head, but 209. I've always wondered, like, why couldn't you get to one
that
more
last
billion,
billion.
210? Like, was that just too much? The 16th largest bank in the United States is what I read, right? And they had some good stuff going on. And depending on who you read, there were some people that were talking about it that they invested in treasuries.
Yeah, they had a significant portion of their holdings in treasuries rather than other alternatives, whatnot. I'm not sure how much that matters, but
and what they were saying was that because the treasuries are a real good investment when interest rates are low.
Yeah.
Because the interest rates being raised, they're not. And so they sold some at a loss, a significant loss. I think the number was $225 million.
Yeah. Which is a bad day. Right. I mean, it's
like, a bad. Oh yeah. Like, let me
be
very clear. If I'm selling $225 million or something, well, it's fraud because I don't have $225 million. That's a different conversation, right? Yeah. So they had a loss. They announced it as a major incident report, which is something the SEC requires.
Yeah, they're required to send out. Yeah.
Makes sense. And a number there. This bank, I think you said it perfectly earlier. This bank had focused on deposits, supporting startups in
Yeah.
Silicon Valley. So high value accounts, right? Large deposits, whatever, but also relatively risky,
Right.
right? You know,
Yeah. They specialized in saying, hey, all of these other banks won't fund your extremely risky startup. We will. We're going
yeah,
to take on more of that risk, but as such, we're going to, you're joining kind of a little bit more of a risky organization
yeah,
because of it. Right.
yep. And so they took a loss. They filed an incident report, and then during that week, uh, the VCs, the venture capitalists that had given the money to these startups, basically started telling the startups to go withdraw their money.
Because there was this, oh shoot, what's happening?
Yep.
I think part of it is they didn't really pay a lot of attention, or maybe as much. You've got some tech guys who maybe aren't digging down into the SEC filings details as much. The venture capitalists probably were, but
Well, and there was that one thread that I shared that we can probably put in the notes if we can find it again. It was
yeah,
a Twitter thread talking about the problems with the communication.
yeah,
Like that, according to this thread, SVB actually wasn't in really serious trouble because of the loss, right? Not because of the run, but because of the loss, but because of the way they communicated it, right? They did bad job at communicating. That scared people. They actually, and this is a quote, like their CFO actually said, "Hey, everybody, calm down."
yeah,
And we all know the best way to calm somebody down is to tell them to calm down.
right.
Right? Like, you're overreacting. Calm down. Never goes over well.
Let's be reasonable here.
Yes, that's another good phrase. That's another one that caused people to get really angry.
Yeah.
And so that just triggered more people pulling money.
It kind
Uh,
of started a stampede, right? Like
yeah,
it would have been just, oh well, that sucks, a little bit of money loss. Instead, it created this stampede situation where everybody's pulling their money out, and then what happens? I mean, this was like in the Great Depression, right? When people started taking their money out of the banking system, and all of a sudden the banks are like, we don't have that much money on hand, and so they couldn't get their money, which made
yeah.
more people freak out that, oh my gosh, the banks are out of money, we have to go get it. I mean, that's why we have the FDIC in general now, because that happened,
Yep.
right?
Nope, exactly. But mentioning the FDIC, right? For businesses, the FDIC insures up to $250,000 in the account. Obviously, if you have $1 million in the account, or $10 million, or $1 billion in the account, they'll give you $250,000. All right, like it's not a really good return on your investment there.
Which
And
most banks sort of self-insure by
yep,
having a wide range of accounts. They have a lot of accounts that have significantly less than 250,000, and some accounts that have more, and so there's a balance. I
yeah,
think SVB was fairly unique, right? In that they had, was it 94% of their accounts had over 250,000?
significantly more. Yeah,
Yeah,
I think 94. That's the number. I remember like 93 point something or 94 point something or something like
something like
that.
that. Yeah.
I don't know if they're unique. I know that they are. This is how they are.
In the top 20, I think they're very unique. Like looking at,
Okay.
I saw
Yeah.
a chart that showed all the banks, and like most of them had, like 5% or 10%, or, maybe up to 30%. And then SVB was like 94. You know what I mean? It's
Right.
like very
Right.
different than everybody else.
Yeah. And so this is the problem. And here's, this is all interesting to me. And we can argue the politics, we can argue the financials, we can talk about, the federal government stepped in the Friday of the collapse. I don't remember the date, and I have no idea when we're publishing this. So right now it was last Friday, right? Because today's the 15th, Ides of March. But normally, if the FDIC takes over a bank, which I believe the last time was 2008.
Yeah, it doesn't happen very often.
Yeah.
They're really reluctant to do that for obvious reasons, right?
Exactly. They wait until the end of the day because of stocks, the market, everything else like that. In this case, they stepped in around lunchtime because they reportedly said, it was reported that they said they didn't expect the bank to make it to 5 o'clock. like
Yeah.
dang. Like that's a problem, right? Like the money's going out so fast, they don't have stuff that by like 2 or something we're gonna fail. So we gotta step in now. So
Yeah.
they stepped in, very much a problem. And we'll talk about Secure Ideas' experience in a second, but you know, if you're a business and all of a sudden you're told, hey, your money is not available to you at
Yeah.
all, period, right? That's a panic moment.
Yeah. What do you do?
That
I
is
mean,
how do you make payroll? How do you pay your bills? How do
so
you?
I've got a good friend that their money he runs a startup. Their money was all with SVB, and they're trying to deal with payroll. And on one hand, they're getting an email from the CEO saying everything's fine, everything's whatever normal, but the website is so slow because so many people are trying to get their money out
Yeah,
that I mean it took them like 3 hours to do what should have taken 6 minutes to run payroll.
yeah.
And you know what I mean? It's like they were seriously considering, okay, what are we going to do here? What if we can't get payroll out? Do we
Yeah.
just tell our people tough luck?
Because let's be clear, like you and I have talked about before, Secure Ideas, we have never missed payroll. That has always been. We have had problems getting payroll processed. We not money problems, but technology problems, stuff
Right.
like that.
Bank problems.
Bank problems, which we'll get to in a second. Um, that has always been our key. Denise, Jason, and I, since day one, the worry, our main focus has been. I used to laugh and joke around. And Nathan, I know you heard me say this. Like somebody would sign a check, sign a contract, and they would send us a check, and I would literally say, "Okay, we made payroll this week. That covered payroll. This is awesome."
When
Right?
we were 5 or 6 people, that could happen.
Yes.
Nowadays,
Oh, yeah.
it's not.
Well, no, let's be very clear. 27 people, we could sign a contract that paid payroll.
That's true.
And, so
We would sign it for sure.
done right now. Let's do it.
Yeah.
But payroll has a massive impact, right? If I can't pay my AWS bill, that's a problem.
Yeah.
And I can deal with that. Again, not been a problem, but telling your staff, hey, we don't have payroll. Now let's go one step further, right? We've seen lists of customers of SVB, and one, Etsy, Shopify are two, and now we have a situation where Etsy actually published a document. I don't know if they've retracted it now. When the government said, "Look, we'll cover all deposits. You're fine if you're a depositor." If you sell something on Etsy or you sell something on Shopify and Etsy hold that money for a bit
Until
right?
it's,
That's in their account.
What's that called? PayPal used to do that with eBay too. It's
Yeah.
Oh, what is the term? There's a term for that. Escrow.
Escrow, yeah. And so they hold that money and then they pay it out. Okay, at the end of the month, the end of the week, whatever it is, they issue those checks. So Etsy actually came out and said, payments are going to be delayed, which meant that not just Etsy employees,
Right.
but any of these small people that build stuff. I mean, I make pens.
Yeah.
I'm thinking about starting an Etsy shop because I've had enough people ask me.
Did you see
to
the
buy
keychain
them.
I bought?
No.
I bought a keychain from a Ukrainian metal company.
Oh yes, I want one of those. Yeah,
it should be here. It's supposed to be here any day now, but it's made out of a Russian tank. I love awesome. The back of it says "Made in Russia, recycled in Ukraine."
that is awesome.
Yeah.
But now you have all these other small companies.
Yeah.
They may be a 1-person shop, or they could have 100 people, right, making stuff. Shopify, same thing, right? Bigger companies are using Shopify. Now this
cascade
blowback, cascading domino effect, whatever you want to call it. Lots and lots of companies are impacted by this. Now let's talk about risks.
Yeah.
Right.
How can a company prevent that? Is there what can you do? I mean, you could say, hey, we're going to use a bigger bank like Chase, right? I really tried hard to get you to spit that out.
I know you tried. I was taking a sip of bubbly water when he said that. Croix, whatever you say. I don't know. I don't know how to say
it. Let's talk about what happened with Secure Ideas.
Yeah, and then we can talk about the risks,
and then we can talk about how to mitigate. Yeah.
So a couple weeks ago, few weeks ago, Denise, Jason, and I are the owners of Secure Ideas. I don't know if the 3 people listening know that. But we were working with Chase, who is currently our bank. That's changing. Um, changing rapidly. But we were working with Chase to open a I don't know if you call it a new account, an additional account,
Yeah,
whatever
making a
the word
change.
is.
Yeah.
Right? We were changing account structures a little bit because of some of the accounting stuff we're doing, and basically our credits. And Chase realized in this conversation that even though Jason's been an owner for 5 years or something like that, that they did not have what's called a signature card on file. So they talking to Denise, who handles all, she's basically our CFO, and they said to her, "Hey, you need all three owners to sign this document." And they sent her the document, and we did a signature thing. And that Friday, we sent the document to them. And they Friday night late, like 7-8 o'clock at night, Denise got a phone call that said, "Hey, this has to be a wet signature."
Because that's helpful.
Right, because we're gonna wet sign it and then scan it and send it to you. But okay, I'm not gonna. I understand why they need it. I get it. It's wrong in my opinion, but let's not go there. So Denise said, "Yeah, no problem. Over the weekend, I'll get with Jason and Denise and Kevin, and we'll handle it. We'll get it to you by Monday, right? Because we're not in the same city. So we'll get it to you by Monday. Yeah, no problem. Monday morning, our payroll company, we use JustWorks. I highly recommend them. They're not a sponsor, and
but we've used lots we don't recommend.
Oh yeah, Insperity. Do not use Insperity. They suck.
ADP.
And I'm sorry.
ADP.
Don't use ADP. They suck almost as bad.
Yeah.
And so JustWorks reaches out to Denise and says, "Hey, the way payroll works with JustWorks is on the Monday of the payday week." I think I said that right. They pull this fee out. I don't know, like $182. Then on Tuesday, they pull payroll out of the account. Okay. So whatever that number is that we're paying out that week, they pull out, and then they process it, do some other things. They pull some other money out for benefits and things like that. And then Thursday, Friday, they deposit it in all the employees' accounts. Because everybody uses direct deposit, whatever. No issue. So Monday morning, Denise gets a phone call from JustWorks, and they say, "Hey, small problem. We weren't able to pull the $182. I don't know why that number is stuck in my head, but it was $182.
PTSD.
Yeah, definitely. They're like, "Hey, we can't get the $182 out of your account. It's telling us not that we don't have sufficient funds, but that the account is frozen." And Denise says, "Well, that's weird." What does that mean? So she reaches out to Chase, which is our business bank currently. I'm just going to keep saying that, like, for now. And she reached out to Chase, and of course, our business rep isn't available because, why would they be? And
during business hours,
right? Yeah. And long story short, they have frozen every account Secure Ideas has.
Because
we do not
because you don't have the wet signature for Jason.
Because we don't have the wet signature that they told us Friday night after business hours that they needed. No problem. So Denise is in panic mode now because, and here is, we actually did business continuity planning on what would happen if something happened to our business bank account, right? And we talked about it, like, what would happen if Denise's account got hacked and somebody stole the money out of the account, or blah, 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 blah. What we never considered was all of our accounts being frozen. We did actually consider what would we do if we lost access to the account somehow, and our backup was our American Express card. Right? We have a company card that all the consultants have, and that was actually one of our backups. Like, oh, we can pay our bills this way if we have to. If the world blows up at Chase, we can handle this. Except about 2 hours after Denise got told that JustWorks couldn't pull money out, Amex contacted her and told her at the same time that Nathan and Eric were told by Google Pay, "Hey, your Amex card doesn't work."
We got notification probably before she did, because Our
Yeah.
credit cards were connected to Google Pay on our phones because these are the cards we use when we're traveling. And we got notifications, you can't use that card anymore. It's no longer active. And
Yeah.
so we're like, oh
Because
crap, did our card get compromised? What's going on? We're
yeah,
freaking out. And
like Friday afternoon, Denise had paid the monthly bill, and we pay the bill entirely, right? Hey,
Pay it off every month,
$30,000 is pay the $30,000. Just we don't treat it as a credit card; we treat it as a charge card,
right.
right? And so Denise had paid the bill like Friday. Monday, Amex processed it. The account was locked. So Amex went, whoa,
Yeah.
you can't have this. Now, let's get better. Now we're fighting with Chase, trying to figure out how to fix this. We get the paperwork to them that they needed. They're trying to unlock things. They can't seem to unlock things. Tuesday, it was either late morning or early afternoon. I don't remember which, but Tuesday, the day after the accounts that we were told the accounts were frozen, they may have been frozen over the weekend. We don't know. I get an email. For some reason, my email address is the one they send all the notifications to, which is funny because Denise manages the accounts, but Chase hasn't been able to figure out how to fix that.
Mm-hmm.
I get an email that says, hey, we have found that there's missing information in your account. You have until April 10th to get it to us. If you haven't gotten it to us by March 27th, please don't ask why those dates are different. That's a Chase thing. If you don't have it to us by March 27th, we may restrict your account. And I'm like, you mean the one you froze yesterday? Right? So just so everybody knows, we made payroll. Denise got everything fixed. We manually
Which was a huge amount of work, right? Like,
oh God, she
got
felt
access.
this.
Yeah.
I think it took until Thursday for her to get her feet under her with things were working. It took until Wednesday night to get the account reopened, unfrozen, thawed. She did ACHs. Now, here's the best part in my mind of how effective Chase is. Denise is working with our rep at Chase. When the rep actually bothered to call back, Denise says to the rep, hey, I've got to do 26 ACH payments of payroll. We have 27 employees, but one of them is in Canada, so his payment is done through a different system, and that system worked.
Monopoly money.
I'm sorry?
The Monopoly money.
Yeah. So she says to the rep, we got 26 ACHs. That's not normal for us. I can't have you guys lock in the account again because like suspected fraud or whatever. So the rep says, now, keep in mind, dedicated rep. This is the rep that works with us all the time, not like just some random customer service person we've reached out to, right? Actually, part of the way we got it fixed was one of our staff members, his best friend or good friend, is the branch manager at a Chase that's local. She called her friend. The friend called somebody. Like, this is how we're fixing stuff now, right? And so she says, hey, we got these ACHs. The rep says, don't worry about it. I've already talked to the fraud department. I've talked to the ACH department. I've told them that you're going to have an increase in these things, whatever. Thursday, Denise did 23 ACHs. ACH fraud. She's called.
Oh my gosh.
Oh no, you don't normally do this. This is bad. Denise like, WTF, right? Like you told me.
If only I had thought to tell you about this ahead of time.
If only you had been involved in this problem since the friggin' beginning.
Yeah.
So the rep says, oh yeah, I don't know what happened. Don't worry. The 3 you're doing tomorrow will be fine. I've got them covered. I've talked to the ACH department. I've talked to the fraud department. That sounds familiar. Next morning, Denise does the 3 ACHs. Fraud. She gets a call. Like nothing that Chase said was true. So here's what this boils down to.
Yeah.
And I'm not going to say that Secure Ideas is better at risk assessments, but we think more about risk than many organizations do, just due to the nature of what our business is, right? And we never thought about this risk. Yeah. Like, what do you do?
There's always something.
Right.
Like, yeah. I think that's normal because when you think about the things that are most likely to happen and you go through and you come up with, here's our mitigation, here's a remediation, whatever, like you deal with the things that are likely to happen. There's always going to be something else that is less likely that you could not have imagined.
or
maybe you could
should have, but didn't.
Exactly.
Because
right.
in this case, I think we should have. Let me rephrase that. I think I should. I'm going to take blame on this one. I'm the person who sat down and ran through various
All the
things that
what
could
ifs.
happen with the banks and stuff like that.
Yeah.
And I missed this. and you know, there's an easy fix. You asked about how do you fix it with SVB? Yeah. How do you fix it? There's actually a really easy fix here. And we're doing it. We are opening an account. We actually have an account at a local credit union that we've got. But we never used that account. I think it had like 37 cents in it. It was something due to the PPP
just enough
loan.
to keep it open. Yeah.
No, it was just nobody went down to close it out.
Gotcha.
Right?
Yeah.
It was part of the PPP loan stuff. It got opened for that. We got the money. We transferred it to Chase. We never touched it again.
Yeah.
We're going to maintain that account, and we're actually going to put in. I don't know what the number will be, but we'll
enough to cover payroll.
Actually, our thought is a month of burn.
Yeah.
What is our cost for a month? We should be able to fix everything within a month if we can. And if we can't fix it within a month, we have bigger issues, and having the second account is probably not going to help.
But thinking about it from a lot of companies' perspectives, we're very privileged to have that burn available.
Yeah.
That we could set that money aside and just say, hey, this is our emergency fund. If you're an individual, right, you have an emergency fund for your home for when bad things happen.
We hope.
We hope you should.
Yeah.
That's basically what you're going to do. You're just going to store it somewhere in a totally separate bank, different requirements and all that.
Yeah, totally different bank. And as a matter of fact, what we're looking at is we're even going one step further. That's a credit union, and we're going to open up a bank account in another bank, or a set of bank accounts in another bank, right?
Yeah.
But we're actually going to diversify even further and have credit union and bank, and different controls, different things like that. And then now we're going to leave our Chase account open for a while, only because many of our customers pay with ACHs.
Yeah.
They have that routing number. We don't want to deal with that. But that's how we're handling that risk, is we're going to open up. We've already worked with American Express. Matter of fact, American Express, they were amazing and awesome. JustWorks was amazing and awesome. They did everything they could to set us up to help. They recognize that our core business is our employees, that our core, whatever. That's how we're doing it. We are also, this is something that SVB drove. We're now asking the banks for how they are investing, because they have to report that. They have a public document. I think it's called an 8K or a 10K or something like that, or both of those exist. I just don't remember. Yeah. And we're actually looking at them. We're actually, like, Jason, Denise, and I are like, I don't know, it's good, but this, right? We're talking to our accountants about risks and things like that. And that,
I was going to add in there. I was looking back over a conversation I had with my friend about, what do you do now? And one of the things he said, that part of the SVB deal is they actually required that if you have venture capital debt with them, you have to use them for all of your banking and operating expenses and
really,
yeah. So they actually, and their reason was, I think, is they don't want to take on the risky side of an organization and then not also have access to the extra capital and the other the things that are maybe have more expensive fees and all that kind of stuff. So
I can understand that reasoning, right?
Which, that makes it really hard for a company to do, like what you're saying of, hey, let's be a little bit more cautious. And because of the way things are set up, they don't have the same regulation to prevent that. So that is definitely something that somebody would need to be cautious of.
I will tell you that JustWorks actually, during the whole SVB thing, not during our problem, but during SVB, sorry, they actually sent out a series of emails. And one of the things they recommended that would not help us, because we don't have any venture capital. Like, nobody came and said, Kevin, here's $10 million. But what they said was, but this would have helped the people with SVB that you're describing, is make sure you work with your investors, work with that venture capital firm or that private equity, whatever it is, and make sure that they have a plan that if you have this type of, we're cash strapped, but not because we don't have any money, but because we don't have access to the money,
Right.
that they have some form of funding to back that up, right? Like, and I know back when I worked with VC firms, not to invest, but I actually was staff for a VC firm, and that was one of the things they would talk about internally was, okay, we've given $1 million to this company or $10 million or whatever that number is. How much more are we able to provide them, right? That probably less likely with angel investors or startups. Like I don't like the term startup for us. One, we're 12 and a half years old, but even when we weren't 12 and a half years old, we weren't really a startup.
We weren't. We didn't operate in the typical startup fashion. How about that?
Yeah, that works. Yeah. But if we had somebody invest, those people wouldn't have been people we could go to and get more money from.
Right.
Like,
yeah.
So I don't know.
We've gone a little bit longer this episode than normal, but I think just to kind of wrap it all up, I think one of the things that's critical for everybody to do, for not just for banking, but for every part of your business, is to think through those what ifs, right? From a business continuity perspective, what if this happens? What if that happens? What if we lose our ability to do this or access to that? Thinking through those types of things and then saying, okay, what is our plan? And there might be some risks where you just have to accept it and say, we don't have an alternative, right?
Yeah.
We have to use SVB. They require us to have this thing. So we're screwed if this happens. At least you know that. So when it happens, you can respond a little bit more quickly because this is the end result.
And talk to other people internal, people external, talk to friends, talk to people that are in the same, like we regularly, I know you belong to a number of Discords and Slacks. I belong to a number of Discords and Slacks where there's other business people, other consultants, other pen testers that we talk things out with. Like I regularly get text messages from Tim, and I send Tim messages where, hey, this is what we're dealing with. What do you think? How would you handle this? Because like in our case, like I said, I ran through all the risks with the banks. I didn't think of this.
Yep.
I don't remember actually sitting down and saying to anybody else, what do you think about this risk in this case? Right.
Yeah.
I might've, but I don't remember doing it.
One last thing before we wrap up, I thought I just had, one of the things to consider too is ongoing revisiting those risks and the decisions you've made. So for example, this decision, hey, we're going to have a local credit union and keep part of our burn there as an emergency fund. That's something that we probably need to re-review every 6 months or 12 months and say, is that enough? If we go from 25 employees to 50 employees over the next 2 years, that
our
amount
burn's different.
Yeah. And so, you've got to take that into consideration. Or maybe if that bank's policies change and now we don't have as easily, access.
Well, and is that bank as stable? Is there?
Yeah, exactly.
Because we have for us, an interesting twist is that, the owners are in different states. The staff is in different states. There are different rules and things like that that affect it. So yeah, I think you absolutely have to keep reviewing it. So, man, thanks. Cool. I think this was interesting, but I'm biased, right?
I'll talk with my mom after to see what she thinks.
Cool. I appreciate it.
All right. Talk to you later.
Give us that feedback.
All right. Bye, man.
See you, man.